Hi everyone, and welcome to the Southstar Battery Metals Investor Webinar. Southstar is focused on industrial minerals and battery metals for the clean energy revolution and is currently developing the Santa Cruz Graphite project in Bahia, Brazil, one of the premier battery metal jurisdictions in the world. Southstar trades under the symbol STS on the TSX Venture Exchange and STSBF on the OTCQB. Joining us today is Southstar CEO Richard Pearce, who will go through the June presentation, including an overview of current operations and upcoming milestones. Today's presentation is also available for download on the Southstar website at southstarbatterymetals.com. At the end of the presentation, we will open it up for questions for Richard to address. If you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the questions module. Please note, this webinar is being recorded today, Thursday, June 17th, and will soon be made available on the company's website. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Southstar's full disclosure is available on slide 2 of the presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. It is now my pleasure to introduce you to Richard Pearce, CEO of Southstar. Richard.
Thanks, Paul. I'd like to thank Trevor and Paul for putting this on today, and certainly thank all of you for participating and finding out more about Southstar Battery Metals. I'm excited to speak with you today about Santa Cruz Graphite project in Brazil. This truly is a fundamental value play in one of the premier battery metals jurisdictions in the world. It's not an exploration story. It's not a development story. This is a production story. I always like to start off with just a couple highlights. And the first one is really kind of focused on management with a proven track record. And when you look across the spectrum of possibilities where you're going to invest your money, again, oftentimes the best thing to do is bet the team. So I always like to start off with the fact that we're truly mine builders and mine operators. We've been involved in tens of projects. My company basically finds opportunities, develops them, drills them out, gets them through the study phase, gets them through construction, up and running into operations. We have other operations in production. For example, we're currently the 5th largest phosphate producer in Brazil. So when we say that we have a proven track record, we have various projects that we can point to. Probably one of the most other notable projects that we were involved with was Luna Gold that turned into Trek Gold, which then eventually turned into Equinox Gold. And some of the members, bankers, et cetera, from those teams are directly involved in this project as well. So we truly are very experienced mine builders and operators. One of the other things that I think is really different than most of the other peer group out there is the phased approach that we're taking to get into production. So phase 1 is a 5,000 ton per year concentrate pilot plant, approximately $8 million Capex. Phase 2, the way it's conceived now, is a 25,000 ton per year concentrate plant with about a $27 million Capex. So all in, phase 1, phase 2 is about $35 million. Again, I like this approach for two main reasons. One is risk management. It allows you for a relatively moderate Capex to get in production, work through the kinks, develop the understanding of the ore body, recoveries, et cetera. And at the same time, probably even more critically, is develop those key commercial relationships. Industrial minerals are almost like anything else. It really focuses on those key commercial relationships, real pricing, real market conditions. If you think of graphite in two buckets, you have kind of the industrial metals use, which are high strength steels, refractories, lubricants, those types of uses. And then you have the, let's say, the high value add bucket, which is where everybody's really getting excited and where much of the growth is coming from. And in many of those areas, it can take you 12 to 18 months to get your material qualified. for the Teslas, the GMs, the Fords, et cetera, of the world. We've produced basically a ton of concentrate. We've sent 30 some odd samples around to different suppliers around the world. They've all liked it, and now what they're asking for is 1 ton, 5 ton, 20 tons. So it's a process to get your material qualified. And I like this approach because it really is focused on risk management. The second main reason I like this approach is really looking at trying to allocate capital intelligently. So as opposed to turning the mining engineers and the geos loose on trying to maximize NPV and IRR, we'll be able to size the phase 2 plant based on real commercial relationships, real pricing conditions, and take or pay sorts of offtake agreements. The way it's looking right now, 25,000 tons is more likely to be, somewhere between 30 to 40,000 tons. And the pilot plant will turn into our value add plant, but all that will be developed as we kind of move through this process. So we think this is an intelligent way, both in terms of risk management, being very conscientious of how we're using our capital and trying to create the most value for our shareholders. A couple of project advantages. One, this truly is a large flake to jumbo flake deposit. We have 63 to 65% of the ore body is a plus 80 mesh. When you're talking straight graphite con, it really focuses on just a couple factors. One of them is the larger the flake size, usually the larger the price. Two, the higher the grade, as you concentrate it, the higher the price. And then there's other things like chemical composition and physical characteristics. But in general, the larger the flake and the higher the concentration, the higher the price. So in our case, this is a world-class deposit with 65% approximately larger than 80 mesh. In terms of some other advantages, Brazil itself, as opposed to many of the other jurisdictions out there, has a large internal demand for graphite con to the tune of 90,000 tons per year. That's mostly related to the industrial uses, high strength steels, refractories, et cetera. But different than many jurisdictions out there, we can sell a large percentage of our production into Brazil itself. I also like to point out that we have a huge geologic potential. We have 13 claims currently, over 13,000 hectares, and we're really only playing on less than 5% of the overall land package. So we have 10 to 15 drill-ready targets queued up and ready to go. We will be drilling this year as well as next year, along with geophysics. So we'll be looking to really upsize the resource and reserve in a short amount of time. And in terms of met and process, it's again important to show that it's been completely tested. We've run 30 tons through a pilot plant. We put out a couple of weeks ago some fantastic results as it relates to expandable graphites. We also put out last week some fantastic results as it relates to purified graphites. In general, when you take graphite con, which can range anywhere between 80 to 95% CG graphitic carbon, and then you want to use it for many of these high value add, you want to get somewhere in the range of 99, 99.9 something. For anode material, it's typically 99.94, 95. The purification results that we were able to get last week basically got to 99.9993, which opened up a world of possibilities to us beyond just SPG and anode material. So we're excited about that, and our ore body itself is extremely clean when it gets down to purified graphite, and most of the contaminants are just on the surface, so it's easier to purify. Just a little bit about the share structure. Again, 77.5 million shares outstanding, around 112.5 fully diluted. Insiders own approximately 22%. Institutions own about 7% of the overall shares outstanding. In terms of the corporate structure, again, very simple, very clean. Southstar owns 100% of the graphite project. There's currently no debt and currently no streams or royalties on the project or the company. Just a little bit about the board of directors and the management itself. Again, great group of folks that I've worked with, many for over a decade. Good capital markets experience, good operational experience, good Brazil experience. So again, fantastic group of folks to be working with. A little bit about the management. Again, most of the key in management is based here in Brazil. I'm based in Sao Paulo. And again, that's really focused on learning the experiences of the past and being very involved, very hands-on. Again, our mantra is on time, on budget. And I find that if you can be present and involved, you have a much better likelihood of being able to deliver that. So again, I'm based in Sao Paulo. Just a little bit about myself. Most of my professional career I spent in Denver. I have degrees in economics and engineering. Moved to Brazil basically full-time in 2008 and been here ever since. Again, currently based in Sao Paulo. 20 plus years in mineral resources and worked throughout Latin America. It's easy for me to tell you the countries I haven't worked in as opposed to countries I have worked in. But again, we're very, very involved in management and involved in day-to-day operations. Just a little bit about the project again. Fully permitted, fully licensed for phase 1 operations. It's ready for construction. Brazil is a fantastic jurisdiction itself. It's been producing graphite for 80 plus years. It's the second largest graphite producing country outside of China continuously. Again, it's very simple open pit mining. There's no drilling or blasting. It's at surface mineralization with very low strip ratio. The flow sheet is very simple. It's proven. It's very similar to the other Brazilian operations with one important difference. That is, we won't be having traditional sort of pulp tailings for obvious reasons. Brazil has taken it on the chin as it relates to traditional sorts of tailing facilities and pulp tails. So we pivoted about 2 years back, looking at basically doing filter tails where you take the water out of the pulp and basically you have a filter cake that then you can co-dispose in the waste dump along with the waste rock itself. And there's a slide specifically on the excellent infrastructure coming up very shortly. So in general, the project is totally de-risked with the exception of execution risk. So again, proven and tested flow sheet. All our licenses and permits are up to date. We're stepping into production in phases. In terms of environmental risk, again, very, very small footprint on very low risk profile. We'll be in the first quartile as it relates to OPEX. Again, so we'll be competitive with Chinese production throughout the inevitable ups and downs of a commodity cycle. Extremely low capital intensity, especially when compared to some of our competitors out there. So again, the project itself has been largely de-risked except for execution risk. And again, that's where it comes into play to have a very experienced management team that are mine builders and mine operators such as ourselves. Just talk briefly about the infrastructure and again, the competitive advantages that come along with this. I don't know another project out there that's as blessed as it relates to the excellent infrastructure we have to take advantage of. We're 1.3 kilometers off a multi-lane paved federal highway. Again, we're a couple kilometers away from the substation. The gas pipeline is a couple kilometers away. Water will be provided on site from wells generally. Again, the major port facility of Ilhéus is 270 kilometers away. One of the largest container ports in Brazil, in Vitória, is basically 500 kilometers away. As I mentioned previously, Brazil has a very large internal demand for concentrate, so we're within an easy day's drive on paved federal highways to most of the major industrial centers, such as Salvador, Vitória, São Paulo, Belo Horizonte, etc. So in terms of logistics, we're an easy drive away from ports as well as an easy drive away from most of the major industrial centers in Brazil. And I also like to point out really the experienced workforce that we're able to pull from. As I mentioned, Brazil's been producing for 80 plus years. We have folks that have 30, 40, 50 years of graphite experience, both on a technical side as well on commercial side. And so I feel like compared to many of the other jurisdictions out there, it's just a fantastic advantage to be able to pull from very experienced workforces. Brazil actually exports a lot of expertise to some of the other projects out there. I know Brazilian engineers and technicians and commercial folks that have been involved with projects around the world. So again, Brazil is a very ideal spot to be producing graphite and very experienced workforce. It's a little bit about ESG, and it really is part of our corporate DNA because we do have other things in operations. We truly understand the importance of the social license to operate, being a good neighbor, and the importance of doing things correctly. From an environmental standpoint, again, Brazil is very blessed. From the energy standpoint, 80% of all energy in Brazil comes from renewable sources, be it hydro, wind, or solar. There's some fantastic low-cost, tax incentivized solar power project financing that's available to us here, which we will be looking at once we're in production. It really helps on peaking power costing. As I mentioned, we'll be doing dry stack tails, recirculating water as much as possible. Our waste has been fully categorized as non-dangerous inert material according to Brazilian regulations. So again, very small footprint, very low strip ratio, which means that our overall area that we're impacting is small. We have less than 2 hectares of land that's going to be impacted by our phase 1 construction, and none of that is primary growth. Most of the area where we're located is cattle, papaya farming, and coffee farming. So it's been impacted previously by other previous operations and things like that. Again, we are committed to ongoing education, be it training or be it education, environmental education, et cetera. And we will be doing progressive reclamation. From a social standpoint, again, we're very experienced in this. We'll have communication mechanisms in place. We'll be drawing most of our workforce from local communities nearby. We're in constant conversation with the municipalities, state, federal government as well. So again, very experienced folks that have done this before. In terms of governments, obviously independent directors, publicly listed companies, audited financials, money laundering, all the things that go along with the typical publicly listed company. So this is something that is a part of our corporate DNA. It's not just lip service, and because we have other things in operations, we take all this very seriously. So again, if you look at kind of where folks are getting excited and kind of what's coming, again, think of graphite markets basically in the 2 buckets. You've got the industrial uses, which is growing more or less at GDP, a little more, a little bit less. And then you've got kind of these areas here in red, which is really just associated with lithium-ion batteries and EVs. This doesn't even take into account some of the new exciting sorts of uses like expandable graphite, et cetera. But basically, if you look at the world today, overall, there's about 1 million tons of demand for graphite concentrate. By 2025, that's expected to grow to around 2 million tons per year. And then by 2030, that's expected to double again to around 4 million tons a year. What does that mean in terms of mines and the graphite industry itself? Basically, 10 to 15 new mines at a minimum have to come on between now and 2025. And that has to double again basically by 2030. And as I'm sure most of the people on this call understand, it takes considerable time, effort, resources, et cetera, to get a mine into production. So we feel very good about having a fully licensed, fully permitted, construction-ready project and what's in front of us. And in terms of kind of the battery metal markets in general, when you look out across basically what's happening in the perfect storm that's developing, there's been a decade of underinvestment. And if you look out across the different metals that can take advantage of the moment, in my humble opinion, I think graphite is the best positioned metal to really take advantage of it. It's number 1 in terms of overall percentage growth, and it's number 2 in terms of tonnages. So if you look at some of the other possibilities out there, be it lithium, cobalt, et cetera, graphite really is getting ready to have some significant investment pour into it. And it's going to take 3 to 5 years really for the industry to catch up with the growing demand. So again, the opportunity to have a project that's construction ready, fully licensed and ready to kick off, so we'll be in production next year. It's just a fantastic position to be in. It's a little bit about Brazil and kind of where it fits in terms of its overall importance as it relates to battery metals. Currently, it's ranked as the third most important critical jurisdiction as it relates to battery metals, behind only China and Australia. As I mentioned, it's number 2 in terms of graphite, it's number 2 in terms of iron ore, it's number 4 in terms of bauxite, it's number 5 in terms of manganese production, number 7 in terms of lithium, number 8 in terms of nickel, number 14 as it relates to copper and aluminum. So it truly is one of the premier battery metal jurisdictions anywhere in the world. And when you look at where kind of the balance of materials are going to be flowing, obviously China is number 1 right now, but with all the investment going into basically Europe and North America, Brazil has some significant logistical advantages as it relates to those centers, and is an obvious choice really to be supplying raw materials and value add materials as these gigafactories and other value add uses kick up in terms of demand. Santa Cruz truly is a world-class flake deposit. Again, there's not a lot of projects out there that have a larger distribution as it relates to flake size. Again, we've sent 1 to 3 kilo samples to 30 plus different companies around the world. They've all liked it, and they're asking for 1 ton, 5 ton, 20 tons. In terms of the resource and reserve, again, it's a sedimentary deposit, disseminated ore body. The mineralized package varies between 40 and 200 meters wide. It's visual. You can literally walk out and put your finger on the contact zone in many cases. We have 8 kilometers of strike, open at depth, open in both directions. So in general, we have an unbelievable opportunity here in terms of exploration potential. We have 15 million tons currently at a 2.3% grade. Most of that converted over into reserves. We have 12.3 million tons at 2.4%. We will be mining at around 3.4% grade for the first year's operation. Just a little bit about the key financial metrics. Again, NPV5 is $81 million US, 35% IRR, 4-year payback basically from the start of construction. Very simple operations, very simple flow sheet. Again, the phased approach with 5,000 ton per annum and then stepping into 25,000 ton per annum. Our average operating cost is $400 a ton as it relates to phase 1, phase 2. Phase 1 alone is about $530 a ton. But when you look at phase 1, phase 2, it's about $400 a ton. We're profitable on phase 1 alone, and we're also profitable, even more profitable on phase 1, phase 2 combined. So as we scale this thing up, we're profitable throughout the cycle, and we're using in the study an average basket price of $12.85. Again, this is just a fantastic opportunity. By any metric, when you compare us to our peer group, we're extremely undervalued. These are just a couple. This is enterprise value as a ton of CG contained, or enterprise value as a percent of NPV. So again, we're extremely undervalued compared to our peer group. And why is that? We basically got our final license in place on December 31st of last year. And since then, we've been banging the gong pretty hard. We're one of the best performing shares out there. If you look at any of our peer group on a year to date or on a 1-year basis. So again, we've been very successful in moving the project forward and raising the profile of the company, and feel confident that as we kind of work through these next couple months and get our construction financing in place and move into production, we'll be able to take advantage of that re-rate that comes whenever you move a project from development into actual production. A little bit about Capex and Opex. Again, as I mentioned, we'll be in the first quartile of cost as it relates to Opex, so we'll be competitive with Chinese production throughout the cycle. That's one of our strict investment criteria when we're looking at projects. We all want to be at or near the first quartile of cost. In terms of capital intensity, again, we're very low compared to most of our cohort. And it's important to note that most of these other projects are saying they're going to produce 80, 100, 200 million, 200,000 tons of product a year. Again, why is that? Most of these projects at smaller scale are not profitable. And so I feel like when you look at capital intensity, Opex, the opportunity, we're one of the best positioned companies out there for shareholders to take advantage of. This is another graphs that I really like because it kind of talks about Capex versus IRR and the peer group. And what you see is a bunch of projects that are kind of clustered around a 20% IRR, and it's 100, 200, $300 million Capex. In my humble opinion, I think what you see is that many of these projects are uneconomic and won't be financed, as opposed to ourselves, where we're extremely profitable in phase one. We're even more profitable in phase two, extremely robust financials, and we have one of the lowest Capex out there when you look at it in general terms compared to most of these other projects. This is another fantastic graph that I like. It basically compares study phase as it relates to NI 43-101 versus market caps. So you start basically down here with the technical report, step into a PEA, to PFS, to an FS, and then finally to a fully licensed, detailed engineering completed project. Again, we're in here twice just because we have phase one versus phase 1 and 2. Another thing I always like to point out is that many of these studies are 3 to 5 years old, and so are largely outdated. Our study was last updated basically in pricing in terms of December of last year. As I mentioned, we're going through detailed design for construction. We're basically taking what was done previously and getting it ready so we can put out design packages for bid. And because we have other operations in production, I know what my mining costs are. I know what my energy costs are. I know what my labor costs are, et cetera. So we're very comfortable as it relates to our numbers on Capex, Opex. And again, in terms of the value proposition, we truly are one of the most undervalued companies out there. So again, why Southstar? I think this is a truly unique opportunity. It's a project that's checked all the boxes. We've done all the study phases. We have all the material out there and available. Folks can go in, download the PFS. They can look at all our results, et cetera. So everything is out there. There's no red flags. There's nothing that hasn't been tested. It's a fantastic project in a fantastic jurisdiction that's been producing graphite for 80 plus years profitably. There's not many other jurisdictions out there that can even come close to saying that. Again, Brazil is a very mining friendly jurisdiction, great infrastructure, great logistics. There's a large internal demand. Again, not many projects out there can say anything close to that. The timing couldn't be better. We truly are in for a perfect storm as it relates to battery metals. And finally, the team is very experienced. We're in country. We're involved in day-to-day operations, fantastic capital markets experience, fantastic operational experience, a team that is truly mine builders and mine operators. And again, when you look across the spectrum of projects out there where you can invest your dollars, I don't know a better opportunity as it relates to battery metals than our own case. And that's basically it. So just briefly, in terms of timing and kind of how this all lays out, we recently secured some offtake agreements. We have 4,000 ton agreement over 4 years with a European industrial conglomerate. We also signed a 20,000 ton per year offtake agreement with the US producer. They're basically going to take our product, turn it into coated spheronized graphite and sell it into Asia. So what we're shooting for basically is start construction September Q4 of this year. We have a 12-month construction and commissioning schedule, which will basically get us into commercial production in Q4 of next year. The board has authorized us to move forward as quickly as possible on phase 2. So we originally had about 2.5 years between phase 1 and phase 2. We're kicking off the studies already and trying to basically cut a year out of that schedule. So basically we'll be looking at bringing on the phase 2 operations as quickly as possible and trying to take a year out of that 2.5 year difference between phase 1 and phase 2. So that's basically the presentation for today. And again, I want to thank everybody for participating and their interest in Southstar Battery Metals and the Santa Cruz Graphite Project. Open for questions.
Thank you, Richard. Once again, if you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the questions module. We will now take a moment to develop the queue. Thank you. Our first question, Richard, how positive are you in meeting your goals?
As I mentioned, I think we're very conservative in our approach to how we're developing this. We're very experienced as it relates to mining operations in Brazil. Again, we know what our mining costs are, our labor costs are, our energy costs are. We have a great network of service providers, contractors, et cetera, in place. So as we look out across the risks associated with putting this into production, we feel very good in terms of being able to check all the boxes. We've got offtake agreements in place. We've got basically the final design process ongoing. We should have that completed here in the next 4 to 6 weeks with firm pricing on all the equipment, et cetera. So I feel like we've been very realistic and conservative in terms of how we're messaging and communicating this, in terms of scheduling this, and confident in terms of being able to deliver on time, on budget.
And what differentiates the Santa Cruz graphite project from others?
Again, I'll just kind of go back to this slide here. I think when you look across the spectrum of investment opportunities out there, there's not a lot of projects out there that can say part of this or all of this. So we feel like it's the fantastic project. It's got a huge upside in terms of exploration potential. It's in a proven jurisdiction that's been profitable for 80 plus years. The markets understand Brazilian graphite. They like Brazilian graphite. They want more Brazilian graphite. In terms of logistical advantages, again, we can ship product to the major industrial centers on paved federal highways in less than a day's drive. We're an easy hop, skip, and a jump to ports. We have significant logistical advantages to Europe, North America, South America, compared to many jurisdictions. Again, so we feel like in terms of the opportunity out there, and then coupled with the opportunity related to how undervalued we are compared to our peer group, again, I think it's a fantastic opportunity. The management has put their money where their mouth is. I'm the largest single shareholder on my own. But again, management has 22% of all the shares outstanding. So we're extremely aligned with potential shareholders or current shareholders. There couldn't be a better time in terms of having a construction ready, fully licensed project queued up, ready to put into production.
And what processing is required to turn your ore into battery grade?
So basically, it's a very simple flow sheet that, again, has been used in Brazil and most of the other places in the world for decades. So it's very lightly crush and grind, float, screen, repeat, dry. So it's a proven flow sheet. Really, the only wrinkle we've added to it is the filter tails for obvious reasons. Again, there's tons of operations around the world that are using this flow sheet. All the mines in Brazil are using a very similar flow sheet. Again, the only wrinkle really is the filter tails and then the dry stack where you co-dispose the tails along with the waste dump. So it's a proven flow sheet, very benign chemicals. Again, we're using just a very proven flocculant. All our waste product is basically inert, non-dangerous material. So checks all the boxes in terms of the process itself. And then again, we're looking at upgrading materials, both for the expandable graphite markets, fire retardants, et cetera. We put out some results about 2 weeks ago. Again, fantastic results there. We originally were looking at purifying using a traditional acid wash, which is a very traditional sort of Chinese approach to making purified graphite. And again, when I say purified graphite, I mean anywhere from 97% up to 99.9 something in terms of grade. We pivoted to basically a thermal approach for ESG, worker safety, governance issues. So we tested basically in the US a thermal approach, and again got fantastic results. So again, this is a proven process that's in use today. So everything we've done to date has really been proven and shown to be commercial scale and is in use today.
And do you have an advantage over graphite from selling for battery graphite?
I'm sorry, Paul, could you repeat that to me?
Sure. Do you have an advantage over graphite from Ceylon for battery graphite?
Ceylon, sure. So again, when you talk about graphite, there's various types of graphite. There's amorphous graphite, there's vein graphite, etc. So when you look at graphite, you talk about, let's say, in situ characteristics, and then you talk about the characteristics as it relates to the final products. So in general, most of the products out there have to be concentrated. And what it really gets down to, again, is, people kind of get hung up sometimes about the grade of the ore deposit. Again, Brazil, our experiences in terms of having 2.3, 2.4% grade is very similar to the other Brazilian experience. Again, very profitable operations for 80 plus years, 25, 30, 35% margin on the EBITDA, very profitable, first quartile of cost, etc. So when you look across the different ore bodies, you have hard rock deposits, which may be Canada. Most of the deposits in Canada are good examples of that. What that means is you have to go in and drill and blast on the mining front, which add cost. It's inherently sort of contradictory when you look at it, because when you process material, you're always trying to maintain the flake size so that you can get better pricing on the concentrate. And then because it is hard rock, you have to go in and crush and grind it even more. So if you look at the hard rock experience, and I'll use the typical mines in Canada as examples, you kind of have those additional costs associated with it. If you look at Ceylon, for example, I'd encourage you to look at what's out there. As far as I know, there's no project out there that I'm aware of that has a 43-101 defined resource, has a 43-101 defined reserve, has a met circuit that's been proven, and have all that data available to you. So as you look out across the variety of projects that are out there, be it in Africa, be it in Australia, be it in Ceylon, Sri Lanka, Madagascar, etc. Really what you want to look at is what you can get your material concentrated to, and how much it's going to cost you to get to that level. And if you can be competitive in terms of cost and be able to have a good quality product that there's a high demand in the marketplace, you'll be well positioned. So in our case, we've proven the flow circuit. We've concentrated all the way up to 95% on a float circuit, and then we've concentrated all the way up to 99.9993 on a purified standpoint. We will be having SPG results published here over the next week or so, and we will be building a coin cell, going through long cycle testing as well, to kind of help work through that qualification period. So again, I feel like our project is extremely profitable. It has extremely high value product in the sense that we have almost no contaminants associated with the ore body itself, and most of the contaminants are at surface, so it's easy to separate it out without damaging the material and the physical characteristics of the ore body.
Thanks, Richard. Other question is, what is your current cash position, your burn rate, and will you need to raise capital for more capital expenditures?
Sure. So basically, we have 2.1 million sitting in the cash in the bank. We will be going out for our construction raise here shortly. Again, the goal is we have an $8 million capital expenditure for the phase one. We're going out for a little bit more than that. Part of it will be debt, part of it will be equity. But in general terms, we're looking to get this funded for construction and in production basically in Q4 of next year. So that means we basically have to start construction in Q4 of this year. In terms of the burn rate, again, very modest burn rate. We've got plenty of runway in front of us. but our goal is really to push into production as quickly as possible.
And do you have currency risk?
In general terms, if you look at kind of what's happened, I mean, when we did the PFS, it's a perfect example. We did the PFS, the FX was basically at a 3.95. A couple of months ago, we were at a 5.6. So it's nothing but helping. So currently, we're at about a 5 to 5.5. Again, when you look at the projections as it relates to, what will happen over the next year, most of the major banks and most of the folks that I've talked to think it'll stay somewhere around a 5, maybe a 5 to 5.10 range. Trade a little bit up, trade a little bit down. But in general terms, compared to the PFS, our current FX is favorable. All of our equipment will be sourced in Brazil. So we will be, as we raise money for construction, it will be raised mostly in US dollars. And then we'll be bringing money in. All of our equipment and service providers are in Brazilian reais. So again, it should be favorable conditions, certainly compared to the PFS.
And can you tell us some of the other catalysts that investors should be looking forward to in the upcoming quarters?
Yeah, again, we have our SPG results coming out shortly. As part of this study, basically that we're looking at the value add chain, and we'll be looking at where we create the most value for our clients based on our inherent concentrate characteristics, purified graphite characteristics, etc. Looking at putting the Capex and an Opex around that. We'll be drilling this year and expanding our resource, looking to have an updated FS with purification and upgraded value add products incorporated into it Q1, Q2 of next year. Again, so lots of good catalysts coming up, and we'll be starting construction basically in Q4 and then providing construction updates, etc. So lots of good information coming up, and we're always looking around for additional opportunities. So should have fantastic catalysts coming out over the next 6 to 12 months.
Great, Richard. And we'll be taking one more question here. If you can just comment on the performance on your share price to current value.
Sure. So again, one of the most undervalued companies out there. We recently got dinged a little bit lately, the last couple of days. Basically, that's related to coming off the 4-month hold on our last raise. Again, we'll have anticipate that it'll bounce back fairly quickly. But in general, we're one of the best performing shares out there if you look at us on a year to date. That includes Nouveau Monde and some of the others. And so if you look at us, what we've done since we got our fully licensed permitted operations compared to most of the other companies out there, we performed extremely well on a year to date as well as kind of on a 12-month basis. It's interesting if you look out 18 months ago at kind of everything that was going on, most of the companies were very competitively priced in terms of market cap, et cetera. And really, we performed extremely well. So shareholders have benefited greatly over the last couple of months. And even then, we're extremely undervalued. So as we work through this, it becomes apparent that we'll be putting this into production. We get to re-rate. This truly is a fantastic opportunity for investors to get in, enjoy that re-rate as we kind of go from a development story into a production story, and spin this thing up and scale it to something significantly larger. So it's a fantastic opportunity. The board and myself and most executives are clearly well aligned with shareholders and nothing but excited about what we have coming up.
Thank you, Richard, and thanks everyone for joining today's webinar that will soon be made available on the Southstar website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at southstar@rbmilestone.com. Again, that's southstar@rbmilestone.com. Thanks again. You are now free to disconnect.
Thank you.